Hey guys, this is Shannon Lynch, your local realtor here in Charlotte, North Carolina. And my guest today is the ever fabulous Lisa Marie Shapiro from Fairway Independent Mortgage. Good morning.
Good morning, honey.
So we've worked together on a number of transactions in the past, and we thought it would be kind of fun to talk today about what the process is like. Ernest, my social media person who's here with us today, he's going to be buying his first home, and so we've been having conversations about what to expect. And so we thought it might be just kind of fun to sort of walk through it and, just kind of talk about how you and I work together, because we've had some really great conversations about the relationships between realtors and their lenders.
Yes.
And how that can help get the deal.
Yes.
How that can help get the offer accepted. So, and then Ernest may chime in too with some questions as we're going along. So,
yeah, I think especially in the climate where we are, and being in the Charlotte metro area, there's so many more people that are looking to buy than there are available homes to sell.
Yeah,
and I don't think that's going to change for quite a while. It's going to kind of stay a seller's market. That being said, when you're a home buyer, it's more imperative than ever that your lender and your realtor are on the same page with each other. You all three, it's like a triangle, that you're all on the same team, that you're all communicating clearly and efficiently with each other to help get your offer accepted.
and I think a lot of people miss that piece of the puzzle. It's not, and when I meet with new buyers and we start talking about the process, and I tell them, like, okay, so the first step really is you need to get your pre-approval. You have to pick a lender, and you need to get your pre-approval letter so that we can figure out, what you qualify for, how much you're comfortable spending, what you're comfortable having maybe your monthly payment be, that sort of thing.
Well, it's funny that you say that, because it's so many times when I'm speaking with home buyers, one of their first question is, okay, what's my credit score? What do I need to qualify? And then the very next question is, how much do I qualify for?
Mm-hmm.
And that's really not the right question to ask.
What is the right question to ask?
Well, it kind of really comes back to the lender for us to really do, a deeper dive, and it's not just about credit score and income and what's your rate.
Mm-hmm.
It has to do with down payment. What income bracket do you fall in? What's your job history? Are you self-employed or not? There's different documentation needs depending upon which you fall into.
Mm-hmm.
And my biggest question to ask is as I'm finding out that those pieces of information, what do you have available for down payment and closing costs? Do you need a down payment assistance? Is there going to be anybody else that's going to be on the mortgage with you? Are you getting a gift? Once I figure out all this information, then I can help you figure out, okay, so that being said, where do you want your overall monthly payment to be? Because more often than not, you're going to qualify for a lot more than where you want to be, but you might not want the payment associated to that. So it's really, I really kind of try to help people stay with what their comfort zone is. If $1,500 or $2,000 or $1,000, if you know a certain number is like the max you want to spend, that's going to help me narrow down what programs you're going to qualify for, what's going to work for you best, what price range you should be looking at. Does that include, is it a single family residence? Is it a condo? Is it a townhome? So when I'm going through those questions to try to help figure all of that out, that's all way more important than how much you qualify for. Yeah. Because again, you might qualify for a lot more than where you want to be.
So when you first have the conversation with buyers, is that generally the way it goes? Is I'm paying X amount of dollars in rent each month, we want to be about the same, or we want to be a little bit lower? Is that where buyers tend to start when they talk with you? Is that sort of the mindset in the beginning?
Yes. And then, or sometimes they'll come back and say, well, I'm paying this in rent and I'm splitting it with another person, but I know going into home ownership, depending upon, what they're looking at. If they're in a 800 square foot apartment and they want a $3,000 house, they know that they're going to pay more for that.
Right.
So, but that's right. That's where we kind of start, is figuring out, what are you used to paying right now? Where's your limit?
Mm-hmm.
What's your comfort zone? Hey, if your dream home showed up tomorrow, what's the most that you're okay to pay with on a monthly basis?
Right. So just, real quick, and since Ernest is here too, Just kind of give them a real quick overview of, kind of how that first part goes for you guys.
Sure. So, I mean, I explain a little bit more about myself and my company, kind of get into it that way a little bit. I've been doing mortgages for 14, going on 15 years now. The company I happen to work for is a national lender, but with a local feel, obviously.
Right.
And with that, we have so many different loan options. There's conventional and FHA, which is typically considered like a first-time home buyer program because it allows you to put down as little as 3.5%. Some conventional loan programs allow you to put down as little as 3%. There are down payment assistance programs. So there's just so many different things that we have access to.
Mm-hmm.
That's where I almost always start with asking those questions. What money do you have available for down payment closing costs? Where do you want your monthly payment to be? Are you looking at a single family residence or townhome? Mm-hmm. And then at that point, getting an application done. And that's going to entail, yes, we need your birth date and social security number. We need a 2-year residential and employment history and pull a credit report and kind of start putting the puzzle together, putting the pieces together.
So you're creating the picture.
Right. So it's interesting to me how sometimes people come out and they say, okay, well, I'm shopping for a mortgage. I'm a first-time home buyer. Can you just tell me what your rates are? It's not the right question to ask because each loan program, depending upon what your situation is going to dictate what the rate's going to be.
Yeah.
So it's kind of like when you go to the doctor's office, you don't say, hey, I got a bug, something's going on. What's the best, what's the cheapest medication you're going to give me? It's like, that's not how that works. The doctors, it's your situation is as unique as your blood work. So your doctor's going to do, their own analysis. They're going to ask questions to help figure out what's the best way to serve you. And I do the same thing.
That's a good analogy. I like that.
Thanks. Yeah. So with that, once we have that, and once we've figured out, where you need to be, and we've got you essentially, that's pre-qualified. So a lot of times people are like, what is the difference between a pre-qualification and a pre-approval?
All the time.
So pre-qualification means I've pulled your credit. You and I have had a conversation. You've given me some numbers on your income. We've talked about your price point and different loan programs.
But you haven't done the deep dive at that point.
Your credits, we've had conversation.
Right.
I've pulled your credit, so I know what your credit scores are, and you've told me what your income is.
Mm-hmm.
Based on the credit report, that's a pre-qualification.
Okay.
A pre-approval means I've seen your income statements as well, and likely your asset information too.
Mm-hmm.
That means, okay, I actually have documentation to back up what we just talked about. Mm-hmm. That's a pre-approval.
Gotcha.
So when you go to make an offer on a house, the selling agent, the listing agent, when you're submitting the offer and you're accompanying that with a pre-approval letter, they're going to want it to say pre-approval. If it says pre-qualified, that means they haven't looked at your documents yet, and they don't know, processor or loan officer or underwriter, no one's looked at your income documents. And that might make that offer more risky to accept.
Understood. Yeah. So let's talk a little bit about, because I know, basically at that point you're getting all the, the buyer responsibilities at that point is they need to get all these documents over to you so that you can do what you need to do. And then once we've got the pre-approval letter, then we're off to the races.
Right. And that's benefit for you as a realtor, because now I've helped the buyer really hone in on what their price point is, if they go 10,000 over or 20,000 over. And by rule of thumb, for every $5,000 you move up or down is about a $25 difference in monthly payment.
Yeah.
For every $10,000 that you move up and down is about a $50 difference in monthly payment.
I think that's so powerful, and people don't understand that.
Because they're like, okay, so can you look at this house and this one's $5,000 more? Is it going to be a difference? So it's, rather than having to reinvent the wheel for everybody, it's like, here's your price, here's your target. This is where you said based on your monthly payment where you want to be.
Right.
But you might qualify for more than that. And you might go out and start looking at houses and find at that price point, you're not liking what you see, but you found one and it's $20,000 more, but man, that is the one you want to get.
Mm-hmm.
So having that information, you're like, okay, so $20,000 more means it's $100 or more. Oh, because it's that one and I love that one, I'm willing to spend $100 more on that to get it. So kind of having like, here's your target, but then if you need to go up or down, likewise, you might find something that's less less expensive than what you're looking at. It might be $10,000 cheaper, and great, you just saved yourself $50 a month.
Yeah, it's a great measuring stick.
Yeah, you have some range there, and you kind of know what, again, within your price range. It's the same thing as when you're going to go buy a dress or try on shoes or buy a new car. You might say, I am not spending that much money, but then you get in that car and you sit in that seat and you're like, oh yeah, I'm going to pay up on this one because it's the one, right?
Yeah.
And you don't, as a buyer, you don't know what that feeling is until you walk into that particular home and it hits you.
I think another thing is people don't realize how important which lender they choose is. And I say that as a realtor, that when we do listings and we receive offers, one of the things that the sellers and the realtors will look at is the pre-approval letter. And you will look to see who it's from. And I know a lot of times, do you want to speak to online lenders? Do we want to touch upon that? Because I know
Sure.
that someone that you used to work with, your company, just posted a second time where she's seen a statement where a certain lender beginning with Q had a $20,000 or $25,000 charges on there.
Yeah.
So the rate, I guess, may have been really low, but then there was these other fees. Is this something we want to talk about?
So yes, I mean, it's important, again, it's not all about the rate. I have people come up to me and say, oh, well, I saw this online, or, hey, I went to go apply for this, 8-minute mortgage on my phone and they said I could get this rate. It's like, sure. And I can too, but I didn't think that you wanted to pay, 2.5 points. So talking about points,
Yeah,
what's a
let's
point?
talk about that because people
Right.
Yeah,
So what's a
please.
point? So when you're looking at interest rates, let's say your interest rate is 2.75%.
Okay.
Let's say, because my gosh, a couple of years ago, we would have thought you were crazy for saying that number. We're there and it's insane. So let's just use this as our little ballpark number.
Yeah.
Hey, yeah, I can get that for you. Okay. Well, I think I'm going to go with this company over here because they said I can get 2.5. Well, sure. Let's look at their document. Let's look at their forms and
you'll
see
do
what
that?
they say. Absolutely.
Okay.
Hey, let's do apples to apples comparison. My job is to serve you. If at the end of the day, we're all trading pretty closely together. So it's really all going to come down to, how's it being presented to you?
I see.
I've had people say, yeah, I did the 8-minute, it's a mortgage. This is something that's a big financial decision.
One of the biggest
this is something you shouldn't let a computer automated thing decide for you in 8 minutes. You wouldn't trust a heart surgeon to whip it out and get it done in 8 minutes, right? Like, let's take some time to have a talk and a conversation about it.
Absolutely.
I had a friend and we were looking at that for his house, and he sent me over their loan estimate, and sure enough, there were 2.5 points. So when I initially start quoting out rates, I start off with no points, no origination fee, meaning that's my par rate. That is you not having to pay anything extra to buy that rate down lower.
Right.
And I'm not giving a credit. That's just kind of where it's at.
Right.
Now, do you want to get your rate down lower? Absolutely. So that's where things like points and origination fees come into. 1 point equals 1% of your loan amount. So if you're looking at a $300,000 loan amount and it ends up being 2.5 points that somebody's charging you, then that just became $7,500 extra fee to save you maybe $40 a month.
So what you're really doing is you're prepaying the interest when you buy points. Is that correct? Am I saying that correctly?
It's not really that you're prepaying the interest, that you're paying a fee to get a lower payment.
Okay.
So over time, then that can save you money, but you have to see what that break-even time is. How much is that cost in points and origination fees versus the interest rate if you weren't paying points and origination fees? What's the difference in the monthly payment?
Right.
If
you're paying $7,500 up front to buy a lower rate, how long do you have to stay in the house before you hit a break-even point?
Right.
That so it makes sense to do that.
Let's say it saved you $60 a month. Let's say you were spending $7,500 and the difference in the rate for you having bought that down was $60. That's 125 months. That's a 10-year break-even period.
Wow.
That does not make sense to do.
Well, and truly, most people are not in their houses that long.
No.
I'd say 5 to 7 years for the
Correct.
most part at this point. Would you agree? Okay.
Yes.
Yeah.
Yes, because people have life changes. They get married, they have kids,
Right.
they need more space, they need a home office because of,
Right. Kids
stuff.
move out,
Kids
empty
move
nesters,
out. That's right.
downsizing.
Exactly.
Or now, we're seeing a lot of double, 2 master suites. We're seeing,
right, because
parents
are now living with their kids.
Right.
So you've got a lot going on in there. Now, if the break-even period is, 3 years, 3.5 years or less, and you think, hey, I'm going to be in here for at least 5 years, then it may make sense for you to buy it down.
Right.
But you also have to decide, especially, if you're a first-time home buyer or if you're limited on funds and you're already putting down, less than 20, less than 10, 5% down on a home, is it more important to you to keep an extra $7,500 in your pocket?
True.
Or have your payment be $60 a month difference?
I'd rather be cash rich.
I would too, but that's an individual choice. So
Yeah.
that's why having conversations like that is so important,
Right.
because everybody's situation is completely different.
I understand. I just think, especially with the uncertainty of today, that it's always good to have an emergency fund, a healthy emergency fund.
I would agree.
So one of the things that, and I'm going to kind of backtrack a minute, is that I know that, realtors, especially local realtors here, we know a lot of the lending companies.
Right.
And when you're dealing with a local lender here, certain companies have a reputation of closing things on time, no
Right.
problem.
Right.
And then there's others that, are known for maybe causing some delays or having some hiccups. And so that's something that I know realtors, will look at and,
Right.
and discuss with their sellers when they're reviewing offers. Is
Right.
that's one of the pieces of the puzzle, truly. I mean, I don't know how big of a piece. I mean, obviously, when you're buying a house, it's based on price and terms, but who you choose as your lender does matter.
Absolutely. And I have that conversation with buyers too, that who you get your pre-approval letter from is just as important as what your offer is going to be.
Mm-hmm.
And, that being said, there are lenders where most realtors, because lenders start to develop a reputation when they miss closings.
Mm-hmm.
And my goodness, realtors are going to pay attention to that, right?
Yeah.
And they're going to share that information.
Well, listen, there is nothing worse than having a closing set up for Friday. Your people have their moving truck set up for Friday afternoon or Saturday.
Right.
And, maybe it's their last day in their apartment. And, guess what? We're not going to record till Monday. And now you've got to try and reschedule. It's very, very
Right.
stressful.
It makes for
Right.
a really uncomfortable and just sad situation, and no one feels good at the end of it, and it's stressful.
No. And that's why I always try and tell my folks,
Right.
understand that there is a 14-day grace period. And even though this is the settlement date that we have on the paperwork, things can happen, especially as crazy as our market is right now.
Right.
It's not uncommon to potentially have,
Right.
a delay, whether that's we're waiting on the appraisal and the appraisal hasn't come back yet, or just things beyond our control.
Right.
But yeah.
So in reviewing pre-approval letters and when listing agents have offers, one thing that I do, again, in communication with my realtor partner, is when, let's say you have a client and you're making an offer in on a home for them, both of you have already reached out to me to say, hey, we need an updated pre-approval letter. And again, I try to make that as, address specific or price specific to that transaction, because the seller doesn't really need to know your max qualification.
Absolutely
they just need to
not.
know what you qualify for. And sometimes some of your online lenders or big box lenders will only send you a letter with your max approval, and that can hurt you because that tells the seller that, they can well more than afford this house. I don't need to negotiate with them. I'm not going to negotiate repairs with them. So it's really important that your letter is as specific to that property you're making an offer on as well. At the same time, what I like to do, unique to myself, I feel like I don't really know anybody else that does this much, is I always reach out to the listing agent and say, hi.
You're one of the few.
Thank you. I am the lender of record for this client. They're submitting an offer to you. I have verified their income, their asset, their credit. they're a sure thing. We're good to go. They've just been looking for a house. You know, if your client needs a little, wants a faster closing or needs a little bit more time to close, we can accommodate that.
Yeah.
Should your client accept this offer, I am your direct point of contact. You are more than welcome to reach out to me at any point in time for any status updates. I'm also going to update you weekly, even if there's no change to the process.
Yeah.
Let me know if you need anything else from me. And I've been pretty successful in helping clients get their offers accepted because I reached out. Listing agents tell me all the time, no one does this.
No.
You're the first person I've seen do this. Or, oh my gosh, I love it when, if they've seen that happen before, I love it when this happens. I've had clients have offers that weren't the highest offer, but the seller needed to close on a certain date.
Right.
And they accepted our offer because they knew my company happens to have a reputation of closing on time.
Well, and that's price and terms. I mean, it's
Right.
not just the price, but
Right.
I will say, I mean, you're fantastic in the respect that, if we're out there and we're looking at houses and this market is moving at the speed of light and we need an offer tailored to a specific house, you're really fantastic about responding. And there's been other lenders that buyers I've worked with in the past have, in some cases not gone with one of the preferred lenders on my list, and they've used someone online. And
then I get a call from you saying, help me.
Yes, that's happened too. It has. But it's like we couldn't get a hold of the lender. Like it was after 5 o'clock and we couldn't get, a new pre-approval letter tailored to the property that we were making the offer on. And I also feel like when it is a multiple offer situation, and if the offers are close, you calling that listing agent, I feel like gives you a slight edge.
Yep.
Because everybody wants to work with people they know, like, and trust. And everybody wants to work with people that are going to have the same goal in mind. Everybody's working towards the same goal, and that is getting the deal to the closing table and getting the buyers in their new home and letting the sellers know that they're going to close with peace of mind, as best we can. I mean, so I think that's a really big part of it.
And I like, especially with my company with Fairway, I have, technology. So where if I could be sitting on a beach at 5 o'clock on a Saturday and you text me and be like, Lise, can I please get an updated letter? And because of technology, I can send you an updated pre-approval letter from my phone in about a minute.
With mojito in hand.
With mojito in hand. So that's also really helpful because it allows me to still do what I do, spend time with my family and my clients because, both are equally important to me.
Right.
And, at the same time, my goal, like you just said, is to make sure that everybody gets to the closing table. There's no surprises. It happened on time. Mm-hmm. The buyers are signing their documents. Nothing's a surprise. We've reviewed the numbers. They know exactly what everything looks like. Mm-hmm. The listing agent didn't have to, keep bugging you as a buyer agent to find out what's going on because they can get to me and I'm already updating them. And same thing, when you're the listing agent and those offers are going that way, you have a lot more peace of mind because the transaction's happening on time, the communication is free flowing, and everyone's really happy, and it's just a positive experience for everyone at that point.
Absolutely. Lost my train of thought. Okay, let me think. Boy, we were cranking right along. I don't know. Is there something you So I think part of it too is the lender-realtor relationship is so important, and it's not just us communicating with each other, but also with the attorney, and really most importantly with our mutual client. I mean, I love working with you. You are fantastic about, and one of the things that we've talked about is, I've had buyers that were interested in. They weren't sure if they wanted a single family home or if they wanted a condo townhome. And you were great about explaining, that the buying power is not quite as great.
Well, yeah, let's talk about that.
Absolutely.
So let's say you're looking at a house and it's $300,000. Mm-hmm. It's a single family home and here's your payment.
Right.
But let's say you also find a townhome. Now that's going to have a monthly HOA. That's your homeowners association fee.
Right.
So your HOA is basically responsible for typically like road maintenance, building maintenance, landscaping, if there's a pool in the community, a gym, amenities on site. That's kind of what you're paying into. You're paying for not having to maintain the exterior of your building and do any kind of yard work.
Right. So if we're talking condos specifically, everything on the exterior of the building is the responsibility of the HOA.
Correct.
Whereas with a single family home, that's not the case. The homeowner is responsible for everything. Let's talk about the difference in the buying power between a condo and a single family home, because I do have a question about if the single family home is in a subdivision and that also has HOA dues, what's comparing apples to apples, you know, because if you're in the neighborhoods closer to uptown, they're neighborhoods, they're not in subdivisions.
Right.
But if you're talking about a house in a subdivision that does have HOA dues versus a condo that has HOA dues, what's the difference to a buyer as far as their buying power?
So let's say same thing, house, single family house, it's $300,000. And let's say it's in a subdivision and it's got an annual homeowners association fee of $500. Well, that might be broken up like quarterly or monthly, but you know, broken down, that's pretty small, right? You know, we're talking about, you know, $40 a month or so. Yeah. But let's say you say, oh, well, I also found a $300,000 condo. It has a $250 a month HOA. So if you remember what I said about the difference for every $10,000 you move is $50, well, the difference then what you're paying in your payment, if that HOA is $250, that's the equivalent of $50,000 if you were buying it. So if you really wanted your payment range to stay the same and that condo had a $250 HOA compared to a single family, then that condo would need to be $250.
Understood.
So it's a $50,000 buying power difference. For every $50 difference in your HOA is a $10,000 difference in buying power. So $100 HOA is $50 is $10,000. $100 is $20,000. Yeah. So $250 is $50,000 difference in buying power. So it can really kind of flip the script really quickly on what you're looking at.
Right.
Now there's also a difference between condos and townhomes.
Correct.
Townhomes are treated more like a single family residence. Depending upon the townhome will tell you whether or not their HOAs can be different. It can be you're responsible for exterior. We're not covering like everything. Right. Whereas sometimes they do.
Right. So with a townhome, generally you own the land that the townhome is sitting on. Right. Correct.
Right. Because in a condo, traditionally,
you just own inside.
You own the unit itself.
Right.
And it also kind of plays around also difference on interest rates, whether you're looking at a condo or a townhome. If you're putting 25% down or more, they're going to price out the same on interest rate. If you're putting down less than 25%, condos price out higher. And the reason why is traditionally speaking, townhomes are typically like row homes where they're side by side.
I was going to ask you, if they're attached, does that make a difference to a lender?
It only depends if it's condo or townhome. It depends on how it's deeded. So a lot of times, you know, a home buyer will say, oh, well, the listing says it's a townhome, but then you go and actually look at the deed and it says condo. So it just depends on specifically how it's deeded is what's going to help me kind of dictate rate when you're putting down less than 25%. Condos tend to be a more risky product for an investor.
Because?
For a bank investor, because typically condos are multi-units. You've got, it's more risk. Condos typically have more condos that are rented out than townhomes, and you typically are sharing more than one wall. Yeah. Or more than two walls on either side. You're typically, you know, in a multi-story building, so you've got now people above and people below, and if there's more renters, and this person or this person to the left or to the right or up or down, somebody has a fire or a water leak or something, that could affect you. Right. That brings more risk to the unit being damaged.
Right. That makes sense.
So that's why it's going to price out a little higher when you're putting down less than 25%. But townhomes typically stay in the same price range, same interest rates as a single family home.
Gotcha. So we've got 5 minutes left. Okay. Is there anything that you specifically want to make sure that our listeners are aware of or that you want to address?
I would say, again, you know, just kind of lean into your lender and your realtor. Shannon, some things that I absolutely love about working with you is because you're very communicative and you respond quickly, you work efficiently. You are like the biggest champion for your buyers and your sellers.
Yeah.
Whoever's got you representing them, they are in the best hands because you really care and you really look out for your clients.
Well, thank you for that.
And you're welcome. And again, it's group texts are awesome because again, it keeps us all on the same page, which is again so imperative in this day and age. Back on the home buyer thing, I did want to kind of mention again because of how competitive the market is.
Mm-hmm.
A lot of times people say, well, can I get the seller to help pay some closing costs? Absolutely you can. However, this is how I kind of address that is because it's such a competitive market.
Mm-hmm.
If you're not asking for closing costs, your offer is going to stand out stronger.
Mm-hmm.
If you need help with the closing costs, then you can work that into the deal. So usually how people will work that in is say, okay, Cicely, your house is, what you're looking at is $250,000
Mm-hmm.
and you need $5,000 in closing costs.
Mm-hmm.
Okay, I'm going to offer you $255
Mm-hmm.
for you to give me back $5,000.
Right.
So you're kind of financing it in, but not really. What you're trying to do is get the money that you need, but keep the seller's bottom line the same.
Right.
So you're not asking them to take a reduction. If you are out there looking at new listings, understand for a long while, it's going to be a multiple offer situation. So it's really important to have your ducks in a row. And if you're serious about buying a home, you need to be prepared to have your earnest money and your due diligence funds available. If you don't have at least a couple $1,000s ready to go for those items right out of the gate, you need to wait to have that in your pocket. Don't scramble around at that point in time and trying to come up with where that is. You need to have it ready to go. If you don't, then it's not time yet. And it's okay for it to not be time yet.
Right.
Because what you don't want to have happen is go under contract or something and then something fall out. And that's all the money that you had, period. And then now you don't have any and you don't have any for the next one. You just kind of want to be bolstered and ready. And again, that comes from, constant and clear communication with your lender and your realtor at the same time.
Yeah. This market has just been so strong that when we're writing up the offers, absolutely it's price and terms. And so it's not just the amount you're offering, but truly it's how much due diligence are you willing to put up? How much earnest money are you willing to put up? And, if it's an older home and you're the buyer and you want to ask for a home warranty, that's fine. I understand that.
Right.
But I really try and advise my clients at this point not to ask for closing costs, because I think what buyers need to understand is what the listing agent's going to do with each of those offers that they receive is they're going to sit down with the seller and they're going to have a sheet where they're going to break down, here's what the offer is. Here's what, they're asking, this is what you still owe on your mortgage, so we're going to subtract that out.
Here's what you're going to net on this.
And so we're looking at what the net profit's going to be. Mm-hmm. And so every time you ask for something else, you are reducing the seller's net profit, so it weakens your offer as a buyer. So at this point, with the market being 1.1 months of inventory, with 6 being equal, I mean, it's such a strong seller's market that people have to come to the table as strong as they can, and they need to keep the offer as clean as they can, especially if you're under, what would you say, 300 or 350 price point?
Yes.
Just on fire.
It's on fire. And another thing that I'm seeing where it seems to be where offers are getting accepted, this being, like you just said, the stronger offers, if you don't need to ask for closing costs, that's going to look better than somebody asking for closing costs. Even if their offer point is higher, it's just going to look better. On the same thing, on your earnest money and your due diligence. That's your good faith money you're putting up front, showing that you're serious about buying that property. Mm-hmm. For a while, it's been, a little bit, less on the due diligence part, the non-refundable that stays with the seller no matter what, versus the earnest money. And the offers that I'm seeing winning out right now make that equal. So it's on average about 1%, right?
Yeah. Well, that's interesting. You close how many a month on average?
15.
Yeah. I mean, you're seeing a lot more than what, obviously myself as an individual agent is seeing, but where, it used to be my rule of thumb was, you would put 1% down between the due diligence and the earnest money of the purchase price. Right. And that's out the window. We're going in stronger, heavier on that than we used to just to get the deal.
exactly.
So it's tough. It's a balancing act. I mean, is there anything you're seeing on your end as far as what buyers can do to help them get the house?
Yeah, so definitely split your earnest money or due diligence, whatever you're putting down there, split that in half. Don't make the due diligence less, split that in half. Write a letter. If there's,
I will tell you though, because of fair housing,
Yeah.
that's a really big
okay.
thing right now amongst the realtors, because
Okay.
if they're going to write a letter, it needs to be about the house.
Right.
It cannot be about,
Right.
they should not include a
No
picture
personal
of themselves.
stuff. Correct.
It shouldn't have anything to do with their familiar status or any
Right.
of that. So that's,
Just talk about how the house
Yeah.
speaks to you. Right.
Right.
And I've heard that from, so it's important that you bring that up, because
It's
I
a
have heard that
sticky
from some
wicket.
other agents right now, because again, you're not trying to
well, especially
use anything else to
Right.
persuade a seller.
Right.
Yes. So writing a letter, as long as it's specific to the property.
Correct.
Other things are, being very, able to kind of move around. Like if you don't
Flexible.
need, flexible to either close sooner or later, to help the seller make it more of a comfortable transition for whatever they're doing.
Right.
At the same time, you can say, I'm, again, depending upon the situation,
Right.
I'll pay $1,000 over your top price as long as it appraises here. And if
Yeah.
it doesn't appraise, or I'll still agree to pay this price, minus $1,000,
Right.
kind of thing.
There's escalation clauses we
Right.
can use.
Exactly.
Yeah. I mean, I think, the thing is right now, just like you call the listing agent, I also call the listing agent. And I say, hey, just want to let you know, we saw your house at 123 Main Street. My folks really love it. We're going to be submitting an offer. Is there anything, that the seller specifically wants or needs, so that we can tailor our offer to the seller's needs, so we don't have to deal with counter offers and that sort of thing. We
Right.
want to make it as easy and simple
Right.
as we possibly can out of the gate. And
Right.
sometimes they'll say, well, they really want to close as soon as possible, and sometimes they'll just say, we just want as much money as possible. And
Right.
sometimes they won't give you any indication.
Right.
But I do think it's really important just picking up that phone and having the
Absolutely.
conversation, because now they've heard from you, they've heard from me, and if it's a multiple offer situation, hopefully that,
Yep.
hopefully that helps. But
Communication goes a long way.
Yeah.
A long way.
So Lisa Marie, if they want to get a hold of you, how would they reach you?
Best way is to either call me or go to my website. My cell phone number is really the best way, because it's with me all the time. It's 704-458-9898.
Mm-hmm.
I'll say that again. 704-458-9898. I see you putting that into your phone. And my website is ShapiroTeamLoans.com. You can also just go Google Lisa Shapiro at Fairway of the Carolinas, and you'll find me that way as
Yeah.
well. I'm
Well,
on Facebook and Instagram and LinkedIn.
yeah.
I'm around. You can contact Shannon. She knows, she's got me on speed dial.
You're hired. Yeah, you're
We're
hiding in
here.
plain sight is where
Right.
you are. You and me both. We're all over social media. So, but no, I mean, we've done a number of closings together, and I'm sure we'll do a number more in the future.
Absolutely.
So, well, thanks for joining me today.
Thanks so much for having me. This is awesome.
And thank you for bringing coffee and Amelie's.
Amelie's is the best. I love it.
All right, guys. Well, thanks for joining us. We'll talk to you soon. Bye-bye now.